Now in the studio with us is Willie Meyburgh, who is the CEO of Stefanutti Stocks. Their 6 months results to the end of August were released earlier today. Let's have a look at these numbers now. Revenue 5.3 billion over the period, operating profit 176 million, cash at the end of the period close to 1 billion, current order book 12.5 billion. Tough times, Willie. Are you stabilising though?
Yes, Lindsay. The conditions in the construction industry at the moment, and it's been like that for some time, is very challenging. The important thing for us is that we have stabilized the business, and you can see from the operating profit, although a small improvement relative to last year, it is an improvement. And I think the problem areas that we've had in the business is now out of the system, and we can go forward and build from a strong base, providing there's enough work in the market.
Tell us about that work, because in your SENS release today, the words extremely challenging were certainly caught every investor's eye. And recently I spoke to the chief executive of Afrimet, who said that there is an increased supply of projects, but on a significantly smaller scale. What's the outlook like?
Yes, we've done an analysis from the 1st of March, which is the financial year, and we analyzed projects from the category of between 50 and 100 and 100 to 350 and so forth, and up to R1 billion. And the projects that we've tendered on over that past 8 months, and we think we cover a vast spectrum of projects because our market intelligence is quite good, but we don't cover everything though. And it found that the 70% of the projects we tendered on, they were between the category of 50 million and 350 million. The interesting thing is that almost 80% of the projects that were awarded to us were between the category of 50 and 350 million. So a large percentage of our work now comes from medium-sized contracts. And it's not because we are a medium-sized contractor, because we've geared a business to execute larger projects. It's just that those projects are just not simply available.
Willie, there's one item here that has boosted your operating profit. As I said, revenue flat at 5.3 billion, but operating profit boosted by a review of your property investment portfolio. Please tell us about that.
Lindsay, there are some properties that we're in the process of busy selling, and we had to revalue some of these properties, and because of one of the particular properties that now increased in value, that has now contributed to the operating profit. But in real terms, in real operating profit, one needs to strip that 6 million out of the system.
On that property though, is that just a measure that you're using in the short term until hopefully there is a substantial turnaround in potential projects in the country?
I think the property is not so much about the short term. We experience quite serious problems in delayed payments by our clients. And it's not that we need this for operating, for working capital, but I think we just need to use the properties that are silent, or properties that we don't really use, like a property investment that we have in Zambia. I'd rather get rid of it and keep that money in the business so that at least we can keep our gunpowder a bit dry. Because of the delayed payments, it's putting a tremendous pressure on our cash resources.
It's very sad that a property company, a building and construction company should have to worry about property portfolios in order to boost the balance sheet or the income statement or the operating profit because of a lack of advance payments. I mean, in the past, advance payments would be the norm during the boom times, and also delayed payments. And I suppose at some stage, someone's going to declare a force majeure on you, Willie, and you won't get paid at all, and you'll have to go to the courts. That is the parlous state of the economies in which you're operating, I suppose.
That is a big risk. At this point in time, I must say the risk is low. I think there are some clients that we have got some reservations about whether they will pay or not. But if they do not pay at this point in time, it is not something that will have a material impact on our results. But yes, there is a risk that going forward that clients could default on these outstanding payments. And we are very close to our cash collection on a daily basis to make sure that we manage it very carefully.
In order to make sure that that force majeure doesn't happen in the next 6 to 18 months, what can shareholders hold you accountable to, and how are you looking to manage the workflow of the organization?
Well, I think in terms of the workflow, at this point in time, there is approximately 8 billion rands of work where we feel confident that we have got more than 50% chance of that being awarded over the short term. And it's at reasonable margins, not at very high margins, but at the current margins, and that will generate work, that will generate money coming into the business, and it will generate profits as well. Then we normally identify through our market survey projects available in the market, and we don't put all the projects, but just looking at what we see in the market, there's about 80 billion rands of work that will be coming to the market within the next 18 months, of which 40% of that is outside the country. We're very strong outside the country. Our success rate is about 9–10% on average on these projects. Now, if one takes that, we've got a good chance of securing at least 8 billion rands of work, or a large portion of that, and there are about 80 billion rand in the market, and it's not everything identified, then I can say that there's a market at least. We're not going to stop trading, but we are trading at competitive margins.
So true. Willie, just to close off with very briefly, the Marion Roberts scaffolding incident on Grayston Drive certainly must have hampered confidence levels as well in the industry, despite the manner that the company, together with other stakeholders, actually handled the situation quite well. But from your perspective, has this hampered on confidence and highlighted safety issues?
I don't think it has put new pressure on the safety issues, because in general our clients are demanding on safety standards. Not that they're demanding, we also have our own good safety standards. And if you just look at a record that's kept in the industry, and it's called a lost time injury frequency rate, our statistic is 0.13, which is very good. But unfortunately, I must say that this incident happened, and I don't think it's the way that company operates. Something happened which is terrible to our industry. It is not a thing that we would like to happen, but I think they managed it well, and the focus on safety in our construction industry is a good focus throughout the industry.
Willie, thank you so much for your time today, and all the best going forward. That was Willie Meyburgh, who is the Chief Executive of Stefanutti Stocks.